Welcome to Sectors Up Close. I'm Elena Casas. Today we're talking healthcare stocks, and my guest is Satya Pradhuman, Director of Research at Cirrus. In the wake of the recent regional banking crisis, credit is tightening fast in the US, and investors are turning their attention to defensive plays. Healthcare is a classic. As populations age around the world, spending on pharmaceuticals and medical products seems impervious to recession. In the US, last year's Inflation Reduction Act does try to cap the prices of certain prescription drugs, but overall, healthcare spending is still forecast to grow. Thus far this year, though, investors don't seem too excited about the sector. This is the S&P 500 Healthcare Index. It's 1.82% down on the year, trailing the wider markets. That's despite chunky top-line numbers forecast for the biggest players here. Top constituent United Health is expected to generate $355 billion in revenue in 2023, while Johnson & Johnson is forecast to make $97.73 billion. Well, could a coming recession make those numbers look healthier to investors? Let's ask Satya Pradhuman, Director of Research at Cirrus. Satya, hi, thanks for joining us. Why should investors be looking at healthcare now?
Well, foremost is this the idea that the economy, global economy, is slowing. And to some degree, investors are going to focus on more defensive groups. Healthcare is really front and center in that area. In addition to that, what we're seeing is record discounting within the sector, especially when you look at the other extreme in the growth segments, which would be technology, which is really at record high multiples.
So what parts of the healthcare sector are particularly interesting at the moment?
Yeah, I think at the top of the list, if you're looking at the larger cap, more large cap investment community, I think the pharma makes sense. We're seeing some significant discounts there with healthcare supplies as well as facilities. On the other hand, some of the more expensive groups that we've recognized are like life science, medical devices. So some of the more speculative pieces of healthcare are still too richly priced. But if you're moving to a world where this slowdown continues to really potentially accelerate, then defensive groups, traditionally healthcare is seen as defensive, should potentially look a lot better.
You mentioned, Satya, in a note that earnings expectations for big pharma companies this year aren't that high, and that could be a good thing for investors. So why is that?
That's right. So what we've noticed is that the forecasts for growth have been shaved back sharply. That could be seen initially as a bad sign, and that makes complete sense. The problem is once you get to such extremes of estimates being cut, as you get into this upcoming reporting season, the hurdle rates are a lot lower for these companies now. Conversely, on the technology side, we're seeing those estimates a lot higher. And so we do see this mismatch in the making. So we think healthcare gets the extra focus at this point.
Are there any particular developments in the healthcare sector investors should be looking out for? We heard a lot, of course, in recent years about what they've learned from coronavirus that they could apply to other vaccines and so on. What do you think investors should be looking out for?
Well, I think right now, focus on cash flow. I think the sort of maturity outlook from investors have really gotten pulled back. And so as much as during the pandemic moment, we saw a lot of excitement around high tech healthcare. At this point, it really is a block and tackle sort of marketplace. That said, we have seen a lot of the more speculative names, especially in the smaller cap arena, really break down hard. So I think at some point, as the capital markets, as the dust settles, those more faster growing segments will take stage. We think it's still a little too early.
What companies do you find particularly interesting in this space?
Yeah, so the disclaimer is that I am a strategist, but we do build models on these groups and these specific securities. So Biogen, McKesson were two that rank favorably. We've seen fairly good valuations. We're seeing a pickup in expectations. The growth forecasts are rising. And so when we bring those together with just fairly visible earnings for both these firms, they become pretty attractive.
And are there parts of the sector investors should stay away from? You mentioned, for example, that some life science companies are quite highly valued still.
Yeah, I think broadly, both devices and life sciences are super interesting, terrific organic growth. The problem is that valuations continue to matter, which I think they do. These are groups that are still in the most expensive camp. So we think we'd still be defensive there.
Well, thanks so much for that insight, Satya Pradhuman, CEO and Director of Research at Cirrus. Well, that's our roundup of the US healthcare sector. I'm Elena Casas, and this is Reuters.